Okay, guys, as we see now, the market has remained very sideways in the end. And the challenge in front of a intraday trader is that in the end, there are some trades that will work in its favor. There are some that will not work in its favor. And to book a loss is painful. Most people are hesitant in booking losses, but if you want to become a trader, it is very important that you book your losses on a regular basis because what didn't work, you cannot be emotionally attached to it and take to the next day. I've seen so many traders who want to take their trade to the next stage. Today it didn't work out, so tomorrow it will work out. So many do this mistake, and this is a mistake that should never be done. Let's see. I have these trades going on. Since morning, I was working on PSU banks because PSU bank is where a lot of action is. For example, if we see, uh, let's say here, SBI, like this is SBI I'm seeing. If I look at SBI, look at the daily chart of SBI. Nothing changed when this event happened. Nothing changed fundamentally for this bank. So I have no reason to buy it. In fact, this is a great opportunity to sell. And slowly, it is already retracing a 38% Fibonacci. A 50% is a very normal one. And if the pressure continues down, it might even come down and come back to the old price of 254. So why should I buy SBI when it is giving me very good shorting opportunities? And see, for the last 2 days, continuously I'm shorting. And today also, SBI gave me money. See, I was shorting SBI today here. And SBI has given me a nice 6,000, 5,000, 11,000 SBI has given me, about 13,000. Similarly, Punjab National Bank just went up almost 46% on the day. And PNB has also been coming down. If I look at PNB, it's the same story that is there in PNB. Look at this bank going up, now retracing, and at least about 180 looks like a nice target for this bank. So when you are taking a trade, first of all, you have to trade what you see, not what you think. Many people ask me, sir, how about Nifty? Where is Nifty likely to go? I said, we are in an expensive market. If I look at the market and look at the index, if I check out the weekly chart of the index, see, this is the analysis I was doing in the morning with my traders, and we say that the breakout that happened on 8968 has a golden Fibonacci mirror at 10,301. And that is what the market is trying to jump up today. And it has happened many times in the past that the market has come down from this level and retraced back. So this is exactly what we are looking. This is the golden fib level, 10,300. Market currently at 10,365. And today it opened up with a gap, and slowly it is having a downward pressure. It has not come down today. But look at the candle. We have a doji, little very thin body that is there in the doji, and with a Nifty P close to about 26. That's where the P of Nifty at this moment is, which is very high. If I see here, P of Nifty, this is the P of Nifty here, guys. If I check out what is the value today for the P, you see the P is at about 26.67. This is the time you don't buy anything. This is the time when you sell, get out, book your profits, and wait for shorting opportunities into this market. And that's exactly we have been trying to do for the last 2 or 3 weeks. And the people ask me, sir, what are the good stocks to buy? I said, that is not the question. The question is, what are good stocks to sell right now? What is it that you should get out of? And now that it is about 3:15, so I have to check out what I have to take till tomorrow and what will I, take off today. For example, if I am looking at, let's say I'm trading two accounts here. If I look at this account here, I do not have a, people ask me, sir, show me your DP. I said, see my DP here. I have no stocks. I have nothing in my portfolio whatsoever. Totally out. In this expensive market, you sit on cash. That makes a lot of sense. And if I see here, no positions here, but here I have positions. Here I see I have I've written a few calls since I'm bearish on the market. Those I will carry till tomorrow. And the day has been good. I have booked a profit of about 34,410 rupees into this account, and I'll have this urge to take it till tomorrow. And that is an urge I will have to refrain and book my profit. So I go here, and now I Kotak Bank. This is now fully executed. I'll let it auto square off. This is an intraday trade. I'll let it auto square off. This one I will take till tomorrow because I'm inherently bearish on this market here. So this loss of 4,250 I will not carry till tomorrow. Many people will have the urge, no problem, it will go down. Let me take it till tomorrow. No. In trading, it is extremely important that if something is not going according to you, then you should think about getting out of the trade and not carrying your risk till tomorrow until unless you plan it. For example, this one is a planned risk. This call writing is planned. And I'm willing to have 120 rupees here, which is a 50,000 rupees profit trade. And this I'll carry till tomorrow. But this one, I was not planning to carry till tomorrow. This is an intraday trade which should finish today. It has to finish off today. And that's why this trade I will take off today. So if you see here, I've taken off my trades here. And here I booked a profit of 28,794 rupees. But in the end, I was careful to book my loss of 6,336 rupees also. I not only booked my profit, I also booked my loss because I know if I have to be a trader, I have to have the discipline of booking my profits and also booking my losses. So in the other account, if I see here, it is the same that I am seeing here. In this one also, if I see, I have this trade that is planned to carry till tomorrow, but this one, this Nifty trades that I had intraday, I booked my losses in them. In the end, the market did not go according to me in some of the trades. And here I booked my losses also. So here I booked a 1,400 profit, 385 loss, 2,250 loss, 2,800 loss, 7,900, 6,650, 6,120, 5,520, and 2,100. So this is the loss that I booked on this one. So it is important not only to book your profits, but also to book your losses. So all have to be booked, and that is very, very important to understand here. So in total, I booked a profit of 24,315 rupees, and I booked here on this one a profit of 28,000 rupees. So I 24 and 28. 24 plus 28, that is 52,000 rupees is what I booked here on this one, on the futures contract. Then I was also trading the, this call here. And this call, as I said, I will be carrying until tomorrow. So one thing as a trader that I've learned is that when you are trading the market, everything will not go according to you. You have to plan your losses before you plan your profits. And if you can plan your losses properly, because what if I don't book it? What if I carry it till tomorrow? Well, I have the risk that the 6,000 loss of mine can increase and become 20,000 rupees of risk, 20,000 rupees of loss. So why not book it? So it is extremely important not only to book your profits, but also to book your losses. The market is very expensive at this moment. We have a liquidity driven market, And in the liquidity-driven market, fundamentals take the backseat. That is what has happened in the last 2 months. But we have said historically, November and December have been profit booking months. So this is the time when I would prefer to get out. I would prefer to sit on cash. That's what I'm doing. This is my first account, guys, where I have no stocks in my portfolio. And my second account here also, if I see, I have absolutely zero stocks in my portfolio. I would like this market to correct a little, go a little down, and then probably look for nice buying opportunities which are available to me at the lower levels here. So are there good stocks at this level that are worth buying? Yes, of course. There are many undervalued stocks. But the challenge is when the market goes down, everything along with it goes down. So it is not only the market, it is everything along with it that will go down. And it makes a lot of sense just to sit on cash and do nothing. This is a swing trade, so this will go till tomorrow. But if something was planned as intraday, it is extremely important that it goes down as intraday. So nice loss I booked, and I still finished my day with good profits. It is the PSU banks that you need to be very careful in buying. Nothing has changed fundamentally in these PSUs. For example, if I pick up the top ones from here, let's say Bank of Baroda. See the same thing with Bank of Baroda. Went up, formed a double top here. And since then it is correcting back and going back towards filling the gap. If I look at SBI, SBI is doing exactly the same. Look at Can Bank, doing the same. Bank India correcting down. Andhra Bank correcting down. PNB correcting down. Allahabad Bank correcting down. Union Bank correcting down. IDBI, Oriental Bank, India Bank, Syndicate Bank. You see, all the banks, they are behaving exactly in the same way. If I look at Bank Nifty, just to keep an eye on that. At 25,070, this is Bank Nifty, which has been stronger than the Nifty. It has rallied up. This was the PSU banks up jump, took the Bank Nifty up high, lower high, and this is coming and forming a triple top here. So it will be interesting to see where does Bank Nifty finish tomorrow. Nifty seems to be today it is in a downward pressure it is happening, and if it moves down, what are the levels that you're looking for? There are two distinct possibilities for Nifty. If liquidity keeps it driving, it can even go 700, 800 points from here. It's a stock market. You can't predict the market because the way liquidity has taken it up about almost 500, 600 points, money flowing into mutual funds, it can take it further up. But if it retraces back from the golden Fibonacci, as I was saying, then the level you can look for in Nifty would be the retracement levels, and 38% retracement of the up move is the most common one, so which might take it down to about 10,118, and if it also fills the gap, it might travel down till maybe 10,100. So that can be the level that we can be looking at when we are looking at the market. So I would be very stock specific. Personally, I would like to be more stock specific. I would like to sit on cash, wait for opportunities as they develop. And one thing I have learned is that nobody has ever made a loss if you don't have a stock. Nobody has made loss by booking profits. So, when the market is expensive, you book profits. When the market is correcting, you buy. buy the fear and sell the greed. Right now in the market, there is a lot of greed that is going on. So, guys, take care with your trades, and I would suggest that be very stock specific, learn it, don't be dependent on others, and on your own you can do it. And so I'm finishing my trades today, where I booked a profit of 28,000 rupees into one account, and I booked a profit of about 24,000 into the other account. So about 52,000 is what I'm signing off. And I also booked losses. It's important that you book losses. Okay. Great, guys. See you again. Bye-bye with some more analysis. This is Yogeshwar Vashishtha from Pathfinders Trading signing off. And I'll come back again with one more topic and we will discuss more. Thank you.